I feel like we're playing the quiet game. It's hard for me to sit here and not talk.
Yeah, I was wondering how long you were going to last.
I know it, right? You're like, she's going to
studying. I'm studying my notes and like.
It's like, hurry up, 12 o'clock.
You lasted longer than I thought you would.
I've been home by myself too long. I can't not talk.
One of our goals this year was to be more involved and start coming, and then the COVID came and now no one can come. So
I know.
this is if I'd have known y'all were so much fun, I would have been here sooner.
Oh, man. We do have a good time. And we've had prior to COVID, we had a great turnout for the luncheons and all.
That's
so it's
awesome.
an opportunity to network and meet a lot of new people. So
Good.
So it definitely is. And our women's conference was the last, I guess, social event that we had. We had it in the first Thursday in March, and then it was like after that next week, everything shut down. So we were lucky to get it under our belts before everything shut down.
How many people did you have?
For the women's conference, I think about 125 total was what we had in.
That's pretty amazing.
Nice.
Yeah, nice. We had a good event, some awesome speakers and all at it. So, yeah. So, let's see. It says 11:59 on my clock.
Me too. I'm 11:59.
So, get my notes up here and we'll get ready to kick this off. Let's see. So at the end of 2019, our Small Business Council, we discussed the need to have some type of remote portal that people could connect and join in for the Business Booster Luncheons. We recognized that there were a lot of business owners that weren't able to just step away from their business to attend the luncheons, but that they were really interested in the information that was being poured out at the chamber events. And so it's cool. One positive thing that's come out of this whole COVID pandemic is now we are live and in person. That I understand we have some people at the chamber today that are attending and networking, and then we now have this online portal that people can connect and be a part of the Business Booster Luncheon. So it really pushed us to get our act in gear and create that remote portal for everybody to connect. So I'm excited about that. Kicking off at 12 o'clock. Welcome. Thank y'all all for joining us here today. This topic about finance lending for your business was spurred by a survey that the chamber put out recently. And a lot of the feedback coming back from small business owners was that there was a need for a cash infusion, that the cash flow had slowed down, of course, because of the COVID pandemic, because business isn't the same, and that there definitely was a need for loans. And then just a misunderstanding. A lot of people don't recognize how loans work. And so because of that, we decided on the Small Business Council to pull together a panelist of individuals across our community that are in that lending environment, individuals that we recognize as experts in their fields. And so I'm excited to have everybody here on the panel with me today. And I want to have each of you, I guess, introduce yourself to the group that we have online and in person. And Belinda, we'll start ladies first, if you'll introduce yourself, tell everybody the company you're with, a little bit about yourself and what you do.
Okay, well, it's such an honor to be here. So thank you so much for the invite. My name is Belinda Dumas, and I'm with New American Funding. We have a branch in Stockbridge off of Eagles Landing, so that's where our branch is. We're direct lenders, so we don't operate as a bank, but as a servicer of mortgages. So we do everything in our facility here. Have been in the community for a very long time. We have about 6 loan officers here at our branch. Everyone is very seasoned, and we love Henry County. I've lived here, gosh, over 40 years, and I have a couple of children, but my favorites are 4 grandchildren. So that's a little bit about me, and I've been a lender since 2001. So we've seen a lot of crazy things, but I will have to say this year is kind of taking the cake. So, but happy to be here and get all of our thoughts together.
Okay, cool, thank you. All right, next on my screen is Carrie Arnold. We won't say we saved the best for last. We'll let Daryl go last, but I'll try to score some brownie points saying that since he is my boss. Maybe he'll give me some extra days off or something. But Carrie, if you'll introduce yourself, tell everybody a little bit about where you're from and what you do.
Yeah, thanks, Dodie. This is great to do this. I'm Kerry Arnold. I'm the Henry County Market President for Heritage Bank, and I've been here about 16 years. Heritage Bank has 7 locations. We have 3 locations in Henry County, and 2 in Clayton, and 2 in Fayette now. And we've been around a long time. And a little bit about myself: I'm married about 33 years. I got a son that's married, and my daughter is actually getting married tomorrow at 12:30. And with all the COVID stuff going on, she's getting married at her fiance's house. So I never envisioned walking her down the hall, but that's what I'm going to be doing tomorrow. So I'll be off. So I'm glad to be here.
Thank you. Thank you. All right, Daryl, if you will tell us about yourself, and we'll say we saved the best for last for sure with you. So please share about yourself, where you're from, and what you do.
Absolutely. Dodie, good morning, and good morning, everybody. Thank you for having me this morning. Greatly appreciate the opportunity to be with you this morning. I am Daryl Green. I'm with Wells Fargo Bank. My title is Business Acquisition Manager, but that's just a fancy title for small business leader. One of my roles at Wells Fargo is to help small businesses be more efficient and more effective. And we focus on helping small businesses in the states of Georgia, Mississippi, Tennessee, and Alabama. And so I have 11 directs that work for me in that capacity. And they are always looking for opportunities to try to help small businesses. I am originally from Detroit, Michigan. I've been married for a little over 23 years coming up. And I have 2 daughters. Well, one is just finished up her freshman year of college, and the second one's finished up her freshman year of high school. And to say they're social distancing would be an understatement.
Great. Thank you so much. So all of you at the chamber and online with us today, you'll see we've got a great panel lined up for you. And you may recognize we've got a small bank, small community bank and Heritage Bank. And then we wanted that jumbo mega bank in Wells Fargo. And so, of course, we know when we talk about banks, everybody has loan products that are out there. But we wanted to compare some of the differences just so that you could see that there's pretty much something for everybody out there. And then Belinda's going to come at the end, since she talks about mortgages. You may be thinking, well, where do mortgages fit in with commercial loans and funding my business? And so she's going to talk about some options that you may have using your personal assets to keep your business going during these tough times. So I want to start out this morning, and I'll ask Daryl, maybe if you can tell me, typically what are you seeing when you're working with business clients that are having cash flow problems? Tell me one of the products that you're typically recommending to them when it comes to loans.
That's a great, great question. One of the biggest things that I see with small businesses where they're having cash flow challenges is money's coming in slower than they're sending money out, right? And one of the things that really can help a business owner is if you start looking at how you collect your receivables or how you're getting paid. There's primarily 5 ways a company could get paid. It's either check, cash, credit card, electronic payment, or a wire. And all of those have different functionalities to them, which would allow you to speed up the cash flow cycle. Conversely, if you are paying people in a certain way, that depends upon how quickly the money goes out of your business. So one of the things that you could potentially do is look at either a treasury management solution, i.e. converting some of your payments that you're sending via check to ACH. And also, if you're collecting checks from people, to see if you can get them converted to ACH. What this will do is this will minimize the time that you have to send money out and that you're getting money in, to getting it in faster and sending it out when you want to send it out. So for example, if you owe someone some money and they're due, let's say today's the 18th, 19th, and the money's due on the 20th, by sending it electronically, you can send that payment out on the day it's due at 11:59. That allows you to retain all of those funds to use for your business during that time until it's due. On the other side, if people are still paying you via check, you may want to consider getting ACH payments in or having them send you wires, and you pay the wire fee. This would do 2 things. Number one, it would speed up the collection of cash, and it would slow down the output of cash. If those 2 aren't still enough to help improve your cash flow, then you may want to consider looking for a small working capital line of credit. A working capital line of credit will allow you to do things like make payroll payments, purchase inventory, pay bills, utilities, until you collect in receivables or money or revenue from your customers. Dodie, does that help?
That does. And so talking about that line of credit, typically what amount would I be looking for as a business owner? How much do those amounts typically run for a line of credit?
Oh, that's a great question. Each line of credit is really determined based off the cash flow of the business that we would be looking at. And so there's not a one size fits all. Your line of credit, especially for small business owners, is so important because it's more than likely going to be tied back to your personal credit as well, because on most small lines of credit, you typically are going to be personally guaranteeing that note. Lines of credit can be secured and they can be also unsecured. So we'll talk about the unsecured ones first. The unsecured lines of credit are typically going to be smaller in nature, typically less than $100,000. Anything over $100,000, more than likely a traditional bank will take a general lien on all assets of the company with a specific focus on accounts receivables and inventory.
Okay. And when you talk about a lien on the assets of the company, you're talking about collateral to go along with that line of credit. Carrie, can you tell me like what collateral is? I know with us being in the banking world, we just take these terms for granted. But can you explain to everybody what collateral is and maybe some of the items that can be used for collateral?
Yeah, it's basically anything tangible that has value and can be quickly liquidated into cash in case the loan goes bad. That's the way we look at it. So, real estate is always good, and equipment. We can take equipment as collateral as well. And what we generally do is lend on the lowest possible value that we can get out of it. When we get an appraisal, we get an appraisal for the liquidation value. And that's the most we can lend because we're bankers. We're not in the asset selling business. We don't know what these things cost. We don't know. We don't have a market for it. So basically, what we're looking for is something of value that we can quickly convert to cash.
Okay. Okay. All right. And so, Daryl, when you talk about, of course, it's going to depend on the cash flow of the business for the amounts and everything. So, of course, we know that's going to just be across the board for business owners, and that's going to be a matter of owners sitting down and having a conversation with their banker. Um, with that being said, what type of paperwork or what type of things am I going to need to bring to you for you to evaluate and look at for me so that you can determine what kind of line of credit I would qualify for?
That's a great, great question. What I would strongly recommend is this. I don't care what stage your business is at, whether you're a startup, growing business, even a mature business, put together a business plan. There are tons and tons of free business plans and templates out there. Our WellsFargoWorks.com site has a free plan. I'm sorry, Cary's Bank has a free plan template. The SBA has a plan template. And what's important about a business plan, it's a living and breathing document. And what it allows you to do, it allows you to tell your story. It allows you to tell the reader where you've been, where you're at currently, but most importantly, where you're trying to go. And these three things are super duper important because as you begin to engage with folks about access to capital, it's super duper important that you tell and communicate your story. Now, when you think about just being in the access to capital business, there are really only two types of capital. There's debt and then there's equity, right? And so if you can document where you got your equity from, that could be savings, it could be borrowed from friends and family, and then you're trying to, within the business plan, tell your story. And in the business plan, you'll cover things like a SWOT analysis, which talks about your strengths, your weaknesses, the opportunities, and the threats of that business. What's going on in the current market? You're going to tell me what product are you selling? How does your product work? Who are you trying to sell it to and why you're trying to sell it to them? So in addition to that really critical piece called the business plan, you would also want to bring any type of financial documents that you have that would support your business over the last couple of years. Typically, they're going to be looking for the last couple of years of your tax returns for the previous 2 fiscal year ends. And then if you, depending upon where you're at in the year, we may look for an interim financial statement. So for example, if you were to come in today and want to sit down and talk to someone about a $50,000 line of credit or loan of some sort, you would really want to bring in your 18 and 19 tax returns if 19 is available. And then if you have a QuickBooks or something that shows through at least Q1 would be super duper helpful. And of course, a personal financial statement. I think those three things, your personal financial statement, your company financials, and a business plan would sit down, would get you a great conversation with the banker.
Okay. And Cary, when we talk about the things that we need, because we hear Daryl saying that we need our tax returns, we need our personal financial statements, with all of those things, what do you think is probably the biggest misconception, the biggest pitfalls that customers fall into? You know, what kind of advice would you give them when they're preparing these things and coming in, or expectations would you set for them?
Well, I think the hardest thing for people to do is to fill out a personal financial statement. And because, you know, unless you do them every day, it's not really that easy, but it's really pretty straightforward. I would recommend, if you're a business owner, that you keep your personal financial statement updated, at least on a monthly basis. A lot of your assets change. Some of your personal debt changes. So I would keep up with that on a monthly basis. And that way, when and make sure it's accurate too, because when the banker asks for a personal financial statement, it gives him or her a better feeling if it's filled out correctly. It gives them the idea that you know, you're a savvy business person, you know what you're doing. So I would recommend learning how to fill out a personal financial statement. That's critical.
Okay. And when you talk about that, because a lot of people don't realize that we're looking as a lender, not only from a personal standpoint, from also a business standpoint, how do you separate that? Like, a lot of people are going to say, well, wait a minute, I want to do this in my business, not in my personal name. But can you explain kind of how those two line up and fall into place and connect with one another?
Yeah, you know, you have to live on what you make through your company. So we look at the company first and make sure that there's enough cash flow in there to that's being generated to make the payments on this loan, and also for you to live on. That's an important part of this too. So we in addition to what Daryl generally asks for, we usually want the personal tax returns as well, and that tells us a lot. That paints a big picture, an overall picture of the global cash flow that we're looking for.
Okay. Okay. Now, Daryl, what kind of online portals? I know, and certainly the thing we're not trying to do is like pit a big bank against a small bank, but definitely show the differences. There's some fantastic banks that are involved in the chamber, different bankers out there that I know chamber members have relationships with. So if there's a need, I encourage them to reach out to those that they've had the opportunity to build a relationship with, because I feel like there's something for everybody out there. But when we talk about the world of a big bank, what do y'all offer in the way of a commercial loan online? Is there something where I can go online and do everything strictly there without having to see somebody face to face?
We do have different types of products and services that you can apply for online, but we really encourage you to have a conversation with a banker to make sure that you are getting the right solution for your need. Our online platform, honestly is one of the more robust ones that I've seen. We have some really great free tools and resources out there. I mentioned, we've got a business plan template. We have what they call a competitive intelligence tool that allow you to go out and search the market to find out who your competitors are. We have something called the Business Credit Finder that will help you walk through a series of questions to make sure you're getting the right credit facilities to fit the right need. One of the biggest challenges, Dodie, is that a lot of small business owners may have a line of credit, but need a vehicle. They might use that line of credit because they don't want to go back to the bank. They don't want to fill out an application. They can't do that online, and they go and they get the vehicle on that line of credit. Now you've got a long-term asset on a short-term working capital facility. So doing the research is super important. We have, again, some products that you can apply for online, but I would strongly recommend for small business owners to do this one main thing. Wherever you bank at personally, if you don't have a business relationship, ask that personal banker that you deal with to make a soft introduction, a warm introduction to someone on the business side. I would always start with where I bank at personally, right? That way they kind of know you when you have a bit of history. I would not approach them initially about a loan. I would simply look to build a relationship. I would explain to them what my business does or is going to do. I would then say, if you don't mind, I'm going to come back in about 30 days with a business plan that I want you to take a look at. And after you take a look at that business plan, provide me critical, honest feedback. In the interim, I would be shopping that business plan to my friends and families, potential vendors, potential customers, just to see and get that feedback. After about another 30 days of getting the feedback from the banker, 30 to 60 days, and feedback from others, I would tweak the plan as needed. And then I would go back and sit down with the banker to have a conversation, because again, it's all about building relationships. There was a question online that I wanted to address too while we're on the topic. And that was, what if I don't have a business plan? That's fine. That's okay. But you will then need to really, really, really understand your financial statements and what they say, your tax returns and what they say, because that's the story. If you're busy, if you don't have a business plan, then your financial statements will tell me everything I need to know over the last couple of years. Why did revenue go up? Why did revenue go down? Why did expenses go up? Why did expenses go down? Individual line item of expenses. Personnel went up, inventory went up, but receivables are down year over year. Understanding that information is going to be able to communicate that story to the banker. So there are a lot of organizations that do have quick app online functionalities out there. We do have that, but that's not our primary goal. Our primary is to really try to build that relationship so that we can do a needs assessment and understand exactly what the customer needs in order to help their business. Because the last thing we want to do, Dodie, is get somebody in the wrong credit facility. It could only be, a bad thing for their business if they don't understand what they need and we don't understand what they need.
Okay. All right. Thank you. Thank you. Good information there. So we've talked a little bit about the line of credit and how, there are the opportunities for line of credits out there to be unsecured, but typically we are looking for some type of collateral to attach to those. And so, Carrie, would you say, what about someone who owns a commercial property? Maybe they own their building that they're in and maybe they don't have any type of loan against it, or maybe they have a loan against it and have some equity. With this economy right now, what would be the pros and cons of maybe pulling equity out of that business, refinancing, adding a commercial loan to that property? How can they utilize that to service them right now?
Yeah, they can utilize it that way to pull some cash out, but it would have to be on an amortizing loan, not a line of credit. Because you're going to have to pay that back eventually, and lines of credit are really to fill gaps between receivables and payables, or if it's seasonal cash flow, or maybe the sale of some assets. But if you just need some additional cash in the business, then yeah, refinancing some cash out on your commercial property is certainly a way to go. When someone comes to us and they have a need for some cash flow, our first question is, why does the cash flow problem exist? We have to find out why do you have a cash flow problem, and are you expecting the sales to go up in the future, or are you expecting to decrease some of your expenses, that kind of thing. So, it's a question, it's a conversation. And like Daryl was saying, that's why you need to have a relationship, because the banker needs to understand your business. They want to understand your business. Otherwise, it's really difficult to help you if we don't understand what kind of business you're in and how your business functions.
Okay. Now, one thing that we talked a little bit yesterday when we got together, something that I guess I had kind of heard of in a non-banking world and didn't realize that it was always something that banks offered that I don't think is necessarily recognized out in the world, is factoring. And Carrie, can you tell us a little bit about what factoring is? I don't know if a lot of business owners realize there's a product like this out there.
Yeah, it's a really slick product. It's been around a long time, and it's I was talking about filling gaps between receivables and payables, and that's exactly what factoring is. And if you are selling your product to a business, let's say several businesses like Georgia Power, Atlanta Gas Light, if you're selling your product to places like that, basically what the bank does is underwrites. We look at those companies that you're selling to, and it's real simple. The way it works is those companies who owe you, they actually send their checks to us once you feel a need. If you create an invoice to Georgia Power, they may take 90 days to pay you. Well, we fill the gap there by having them pay us. We immediately pay you, and then they may pay us over a 90-day period. And so you get your cash immediately. And of course, there is a fee for that because there is a lot of monitoring. But it's a great way for you to get your cash tomorrow. And the bank takes a little bit of what you're owed as the fee. And then we collect the money from Georgia Power or Atlanta Gas Light or whatever the case may be over the next 60 to 90 days. So it's a great way to get cash into your business quickly.
Okay. Are there any other products, Carrie or Daryl, that y'all can think of from a commercial loan aspect that may be beneficial to business owners right now with the current environment that we're in?
I would strongly recommend a SBA loan. Those are really, really good loans, not necessarily the PPP loan program, but a traditional SBA loan. Sometimes when you're looking at asset acquisition of real estate, or you're looking at a large equipment asset purchase, the SBA does a tremendous job of stretching out your payments through a longer amortization, and could potentially have a as low as a down payment of 10% equity into the project. So if you wanted to do a, $300,000 project, you potentially could put in as little as $30,000 or 10% on that, acquire that piece of real estate, get a 25-year amortization, which gives you the maximum lowest payment possible, which would then only help cash flow. So I would look at SBA, and then each bank probably has its own signature thing that they do really, really well for a particular industry. Remember, not every bank is for every industry. So do your research. Make sure that if you're going into an industry, I would talk to somebody else in that industry to see who they're banking with, because that means that bank's got experience financing people in that industry. That's something that's really important. And also, again, understanding the type of credit facility that you need. Do I need short-term working capital line of credit, or can I use a corporate card? Sometimes we just might need a corporate card that we can get a certain dollar amount on, allocate smaller amounts to certain key employees for them to go out and procure things. And so understanding the type of credit facility you need, understanding who provides those types of credit facilities in your industry are two key things that I would do.
Okay. All right, Carrie, anything to add to that?
Well, we're talking about lines of credit, and one requirement in a line of credit is there has to be a resting period in there. What I mean by that is, if I make $100,000 line of credit loan to you, you need to have that paid off for about 25 or 30 days. You need to be in and out of that line of credit. You need to be using it as it's intended. And so there's so when you're getting a line of credit, just keep in mind that you're at some point during the year, you're going to have to pay that down to zero in order for the bank to continue to utilize that as a line of credit. Otherwise, if you take $100,000 the first day and never pay anything back, the next time you want to renew that loan in a year, the bank's going to want to turn that out and put it on an amortization schedule.
Okay. All right. Thank you,
Hey,
guys.
Dodie, there was a question in the chat box around a stigma around using a factoring company. I would say absolutely not. And you might also hear the term asset-based lender. They mean the same thing. We've just moved away from factoring to asset-based lending, but they mean the same thing. No, it's not a stigma at all. As a matter of fact, traditional banks understand that. And so Wells Fargo has its own asset-based lending division for to meet those particular needs. But I think financing has matured a lot, and where maybe a long time ago that might have been considered, different than non-traditional banking. It's just another form of banking today. It's no different than micro lending, crowdfunding. It's just another way to get access to capital, and all capital doesn't cost the same. And so you're paying a little bit more for that type of capital than maybe you would for a traditional line, but you might be paying more for a traditional line than you would from a friends and family loan. So it really just depends on where you're getting it, what are you using it for, and then how quickly can you pay it back.
Okay. All right, thank you. So we've kind of left Belinda over here. Y'all are probably thinking like we're just leaving her out of this totally and ignoring her. But to those of you who are listening and watching, one thing that you probably have recognized and that you've heard from these guys is when we talk about financials and the things that you're going to need, they're looking for 2 years worth of tax returns, 2 years worth of financials. And so that means that if you're a baby business, you've only been in business for 6 months or for a year or so, then you may not necessarily qualify for these traditional loan products. And sometimes that hurts and that causes heartburn. And so we have to seek out other options. And so because of that, we've brought Belinda in here. And we talked about earlier, Carrie explained how, you know, they look at your personal assets and that personal financial statement lined up with your business. But Belinda's going to share with us some different things that we can do on a personal aspect with our home, possibly to pull some equity out to keep our businesses afloat right now during these difficult times. So Belinda, if you will start out and just explain to us what is equity in our house and how much equity do we have to have before we can actually even use it?
Okay, thank you so much. That's a great question. And so what we found is if you will, if your house is the equity definition is going to be what you owe versus what the market value is. So I kind of want to explain how we determine the value because that really drives what you can and cannot do. And for a cash out refinance, we at our company at New American Funding, we are a direct servicer for Fannie Mae, Freddie Mac. So we're following all their guidelines, which means exactly like you referred to, we need 2 years of the bank statement, 2 years of tax returns. And if however many you have for the business is also great, but personal. And then that's how we determine your income. And then the appraisal is going to be the last 6 months of sales in your area for your home. So that's how we determine the value. We get a full appraisal when you're pulling cash out, and you can have up to 80%. Up to 80% of the value is available to you to pull out. And so we do these, most people choose the fully amortized loans. If someone requests a home equity line or a HELOC, as we've talked about, we usually refer them to you guys as professionals too. We always say, check with your bank, check with your local, wherever you bank, because that is your expertise and you do that really well. So we typically don't do a lot of home equity lines, but we do the actual where you can pull cash out up to 80%. And that has been a real lifesaver for some of the people that just like you described, they need maybe not as much money as a big startup loan. They just need a small amount to purchase some things, maybe just some startup cost equipment to get them going. And the interest rates are so excellent when it's your home. It's so very low. Sometimes that is a wonderful way to get your start, and then without having to do all the other paperwork, or when you don't have all the history built up yet, your personal does speak for you and you can go that direction.
Okay. And then when you talk about if we refinance the house, can you explain maybe a benefit to refinancing and pulling equity out as opposed to using a home equity line of credit? Are there benefits from one over the other, or where one may be used or better served in one avenue than the other?
Well, sometimes a lot of it is going to be preference. If you're one that likes your payment to be the same every month, you want to stay with a fixed rate. Sometimes a home equity line can be, you get a lower rate, but it's tied to a prime or a different type of rate index, so that there's some fluctuation there. You can also get home equity loans that are fixed. So there's multiple products, but when it's attached to your home, you typically can get the lowest, like a really low amortized rate of 15, 20, 25. You can be creative in what you can do and pull out. And also you can maybe pay off some debt that would keep your cash flow maybe available in a way that you're taking your credit lines that maybe have higher interest rates, and when you tie it to a home rate, they're much lower, and in those threes. You can hardly beat that, and then you are able to write that interest off still, I believe. And so these kind of things, and it's easier. Our typical turn time on a traditional loan like that is going to be about 21 days.
All right. So, Carrie, Daryl, when we talk about, she says 21 days if I need to go out and pull some equity out of my home or to get me a home equity line of credit going, time enough to get that appraisal turned around and everything approved in the paperwork process. When we talk about a commercial loan, if I needed to do a refinance on a commercial property or I wanted to qualify for a line of credit, what kind of time frame are we looking at on the business side of things?
Well, it's here. Basically, once I get all the financial information from you, it would probably take, just a few days to get it approved. But if it is approved, then we've got to contact the appraiser, and to get an appraisal, we also got to contact the attorney to do a title search. And both of those, if they work at the same time, they usually take a couple of weeks, maybe 3 weeks on the appraiser side. So I would say from the time we get all the paperwork, 30 days later, we'd be sitting at the closing table.
Okay. All right. Daryl, about the same time frame? Is that what you're looking at, or?
I'd say a tad longer for us. We're typically going to be 30 days, give or take, from the time we get a full package, get everything approved. But we probably, when I tell people real estate realistically, I just ask for 60 days up front at a minimum. That way, trying to time when the appraiser can get out, when the customer can be there to let the appraiser in, all of these things. And so I never really try to tell them 30 days on real estate. I'm always going to say 60 days. Working capital line of credit, usually a couple of weeks after we get everything to get it into underwriting, to get our questions, to come back and get questions answered. Because again, we want to make sure we're giving you the right solution that you need by doing a very thorough analysis so that we don't have to come back and change something on the backside.
Okay. And then all three of you, would you agree with me having been in the banking business for so long, and I know in my mind I'm thinking this, but would you all agree that typically the slowdown comes when you need things from a client and they just delay in getting it to you?
Definitely.
Yes. Yes. So one way to really condense, if you will, the time is, I'm sure Belinda and Carrie and their teams all write some type of letter to the customer saying, we need XYZ.
Mm-hmm.
And what is important is that you put it all together and send it back in one package. What typically tends to happen, and I do it myself. I'll send in this document, and then I don't have that document. And then I go in and I send that document in. And then in the interim, there was a question about the first document I sent because they hadn't gotten the second document. And so I'm going back and then I'm trying to answer the first question from the second. I mean, if you can just have patience, pull it all together, send it in one file, that will significantly shrink down just the time, because now I've got a full picture. I can get it into my underwriters. They can get their questions. I can get back to you. I can get those questions answered. And the quicker we do that and the quicker we get approval, the quicker we can start ordering appraisals, and we can make those things move faster.
Okay.
Let me add to that, Dodie, too, especially on when we were talking about the time frames during the summertime, and especially with COVID, a lot of people don't want appraisers and different ones in their houses right now. So they're scheduling a little differently. So one thing to keep in mind, too, is with the summer being such a busy season, you've got your values are pretty much have been at their highest. You've got limited inventory. So if you decide to do a refinance in the fall, your look back and your comparables are going to be on all these summer sales that have with the higher value, and you can maximize what you can pull out. So I wanted to mention that. And also to Daryl's point on the paperwork, we have, our portal, when you make an application, it's very intuitive. So it's going to ask you questions, and based on your answer, it'll generate that list. Okay, for you, I need this, this, and this, and you can choose to look for your bank or, where your finances are. If you want to access that, it'll just upload everything into the file. So that's a great way to do answer the questions and get the answers based on that. Or we still have the traditional way you do face-to-face, really depending on what the customers love. I like face-to-face because it just makes everything, when everyone connects like that, that's always great. But for those who don't want to come in, or, different generations like to do it different ways, the portals, the app, the phone apps, all that right now is so savvy. It can walk you through it, and then if you get stuck or you have questions, you can call that local personal, like being able to talk to Carrie, you, Daryl, like walking in. That is like the most beautiful marriage of both things, in person or online, and that's a really great resource we have here in our county. So that's wonderful.
Dodie, yeah, I think it's super duper important. I think Carrie would agree, and Belinda's just said it. That face-to-face personal meeting is important. And while we're in COVID, we can't do that, but Zoom is the next best thing. So, just making eye contact and understanding, if someone goes on a portal and fills out an application and don't get what they want, they'll never really understand the why behind it. When you have that relationship, you're at least allowed to be able to ask the person, hey, what could I have done differently, or what was missing? And I just think building that personal relationship is so super important, because you may not need it right now, but down the road, when you do need financing, you've already established a relationship, and you've got somebody who can call and say, hey, I'm just looking out over the next 30 to 60 days, and my cash flow may be kind of tight. Remember, I sent you that business plan last year. You gave me some great feedback. I'm now in need, or I may be in need in September.
So it sounds like, the kind of the common thread that I'm hearing amongst everybody is, whether you're a community bank, you're a mega bank, you're an individual company, relationships is the key. And I think a lot of times that clients are intimidated just walking into an environment, but you have to realize that this is what we do on a daily basis, and we're here for you and to support you and walk you through the process. And again, I have to stress that I think we have some fantastic bankers across our community that, I'm going to encourage anybody out there that may be struggling or having some tough times to reach out to and find that individual that you can talk to. On the flip side of all of this, another kind of common thing that we have seen in that survey is, we've got financial struggles going on, but we also have those individuals that maybe was around the community in 2008 when we saw so many failed banks. And it may be that I'm not in this boat to where I have to worry about just an overwhelming amount of money that it's not insured by the FDIC. But there are some individuals out there that are concerned about, how does FDIC coverage work? And then what do I do to make sure that my funds are covered in case we see banks fail or anything with this crazy economy going on? And so one thing that in our Small Business Council meeting we had discussed was, sharing with you all. And so that's one thing that I work on, and I wanted to share with y'all today, that FDIC insurance for a business, you're insured up to $250,000 for your tax ID. So that could be $250,000 in one account, or that could be $250,000 divided amongst 10 accounts, but they're all under that one tax ID. And so there is ways that you can extend that FDIC coverage beyond that 250,000 with one financial institution. And there are new products that were released and approved by the state of Georgia this past year that have been implemented across many of the banks in the community. And that's called ICS, Insure Cash Sweep, and CDARS, which is a time deposit program. And so these are programs that you can talk to your bank about investing your money. And essentially a deposit swap is done to where, say you have $500,000 sitting in an account. 250 of that is insured with your financial institution, but they'll swap that additional 250 that's uninsured with another bank, maybe in New Mexico. And that bank in New Mexico knows nothing about you or your account number, but they're insuring those funds so that you can keep all your money in one institution with one banker that's servicing your needs. Whereas traditionally in the past, it may be that you had to put 250 here and 250 there and 250 there, and you never really form a relationship with your banker. And so, of course, we said that's the common theme that we're hearing, is that relationships are so important. And I've seen some clients that are of the mindset of, oh, I need to just spread my money out. But when you're banking with one institution and with one banker and they know everything that's going on, then they can better service your needs and assist you. Would you all agree?
Absolutely.
Absolutely.
Cool. So that gives you a little bit of information, kind of the flip side of that lending side. If you've got that extra money to spare, how you can insure it, talk to your bankers about those programs that are out there so that you are insured. But I'd like to open it up. We've got just a few minutes. I'd like to see if there's any questions out there that the people listening and watching have. We may have done such a fantastic job that nobody has questions.
Anybody have any challenges that they want to bring up? You don't have to be on video.
Jody, right now we don't have any questions outstanding. I think Barbara got a couple from the group in the Hudgens room, and she posted those. Daryl answered both of those. So right now we're not looking at any questions. Of course, if anybody has anything later, they can send them in to us, and we will get those out to our panel and let y'all respond to them directly if they want to ask something individually. We do have one that just popped up. Do you not recommend PPP for businesses at this time?
I will take that on. Absolutely. I mean, if you can qualify for it and maximize the requirements in terms of retaining those employees and maximize the forgiveness, absolutely. I'm on the board of a couple of different nonprofits, and they were able to secure PPP loans from banks in other states, and they've done everything they need to do to satisfy the requirements, and they're going to be forgiven. So I think if you can get an application in, I would strongly recommend you do it. And again, I would start with wherever I bank at now is probably the best place. And last I heard, there was over 70 billion still sitting in the kitty.
Okay, great. One thing, since you were talking about kind of the other loans in the time frame, what's the time frame right now if a business started on a PPP loan, as far as actually getting the funding?
That really depends upon where you're banking and their process. And Carrie, you might be able to talk a little bit more about that. I mean, it just depends upon where you're banking, their process, their requirements of information that you need to turn in, and then your ability to get that information into them as quickly as possible.
Yeah,
Okay.
that's right. It just depends on what bank you're dealing with.
Okay. It doesn't sound like it would be as quick as some of the other products you're talking about, though.
I would say they're all about the same. Carrie's saying about 30 days, 30 to 60 days from end to end. But remember, I walk in, sit down with somebody, tell them my story, couple hours later, walk out with what I need. Belinda, would you say that? Carrie, would y'all agree?
I agree
That's
with
right.
that. Mhm.
Yeah, during the early stages, the
All right.
first stage of the PPP, it took us probably about maybe a week to get the approval and get the money in people's hands. But on the second time, once we got called up, we actually did a few within 24 hours. So it wasn't a long process.
But for a non-PPP loan, Carrie, would you say that that's not the normal process?
Yeah, yeah, non-PPP, it's like what we talked about earlier.
Right, exactly.
Where
Very
between 30
traditional.
Very, yes.
Yeah.
All right. I'm going to let y'all see me here for a second. Okay, so it doesn't look like we have any more questions right now. So I guess we are about at the end of our Business Boosters lunch. I want to thank the panel and for Dodie for moderating. Did want to let everybody know that this is recorded. So we will have it out on our resource page. If anybody missed it or they want to share it with somebody else, or if any of y'all want to share it with anybody, it'll be up there probably in a couple days. And again, if anybody has any other questions, they can email them to the chamber and we'll get them out to the different panelists. Anything anybody wants to say as we close?
Thanks for
Just
having
thank you
us.
for the opportunity. I appreciate y'all taking the time today. And if you have any questions, you can just reach out to me directly or any one of the folks on the panel. I'm sure we'd be happy to help.
All right. Thank y'all
Yes.
so much. Have a
Thank
great
you,
day.
everyone.
Thank you. Have a great day, all.
Thanks, Zoe. Bye-bye.
Bye.